going on?
Good, good. So we got a nice jump on USD CAD this morning.
USD CAD, yeah.
Yeah.
It looks like a day trade might be setting up here on the 15-minute chart off of the 4-hour demand. No proper downward trend line here. But these are the two areas I'd be watching for here. This here and this here. Break, giving us demand. If it breaks up. And then definitely whatever breaks up here. For an entry long as well. That's what I'd be looking at. Nice reaction so far.
Yeah.
Ah. Yeah, there we go. US CAD.
Yeah.
Nice momentum. Yeah, nice momentum. And you see how they did it, right? See what happened here. This move. US CAD, US CAD, US CAD. Did I miss US CAD? Let me see. Where are you? US CAD. Look how many longs they suckered in.
Wow.
You see how they suckered in? Look at all that.
Yeah,
They
big
suckered
move.
in with this.
Yeah.
Tricked them into going long, and then boom, reverse. Why? Because supply was here.
Yeah.
And again, remember what I've always said, right? If you follow what the banks are doing and you know what they're doing, then you will never be caught on the opposing side. You have to know what time frames are in play and what could happen. We knew that there was a weekly downtrend with the supply here. And so a lot of stuff can happen here as a reaction, you know, like this type of stuff. And just because we had a trend line and it broke above it doesn't mean that it's going to start going higher. Retail traders would be looking at that saying, oh, it's going to go higher. Why? Because they're unable to put things into context. So we didn't get tricked into that. We didn't get tricked into going long. We were short the whole time. And now it's looking like it's going to continue lower. Let's see what the dollar is doing. Yeah, the dollar's kind of like just sitting there.
Yeah.
But with the US CAD, we've noticed that the US CAD and the dollar hasn't been perfectly aligned with each other, right? One moves before the other one, but then the other one will catch up, and then the other one moves, and then the other one will catch up after. So, perfect example of that. What's Bitcoin up? Rally up into where?
Yeah.
Towards supply.
Yeah, daily
After
supply.
removing key areas here.
Yeah.
So now, what do you think retail traders are doing? Oh, okay, buy the dip. Now it's time for it to go up. Yeah, it could work, but they have no idea how dangerous that is.
Yeah.
No idea. Because what are you buying off of?
And they're probably watching you break it off for watch online too, Kev.
Yeah, very
Yeah.
possible. But putting it into context, so dangerous. Could it work? Yes, it could work. Are the odds in your favor? Not really. And I mean, you could make the argument that there's demand here because it broke to new highs. That's possible. But what do we know to be true about areas that look like that, right? Not really good for demand.
Yeah,
So, you know,
correct.
I'd be worried about that. All right, so I think we're coming on that time. So in here, I wanted to take you through the process of reading the story of price, reading the real story of price, not looking at support, resistance, Fibonacci retracements, and all that stuff, because that is just, those are just indicators trying to give you some idea of what is going on, but you really don't understand what's going on unless you know the truth about how the market works and the zones and the time frames and how it plays out. Then you can know what is really taking place. So we
Mm-hmm.
pointed out before that when price was down here, retail traders got in mostly long. Now up here, they were getting in long. They lost, so they went in short too late in the game. And then they, at this very low, they got in long again. It came up. When it started to come back down, retail traders started to freak out because, you know, again, once they've taken losses, they get so freaked out they don't want to take any more losses, so they'd rather just close their positions. So then they got in short when it was down here because they thought, oh, okay, it's going to continue lower. Well, that was the setup for the institutions to come in with their longs, and then they push price up. And so now they're starting to turn bullish as supply is being hit. So that leads me to believe that we're likely going to get a push down like that. So let's see what gold is doing today. So it's sitting as after that reaction there. Okay. The trend line is here. It hasn't broken yet because we didn't have a trend line up here. I don't think that's good enough to draw a trend line up there. We can examine it closer. I don't think it's good enough.
Yeah, it doesn't look good. Doesn't
Okay,
look
how
good.
it's crossing through. Yeah,
Yeah.
I don't like that. So the trend is still holding here, but if this breaks, creates supply, then the trend's dead, and then it could retrace to that daily demand zone and then build up momentum and go again. I wouldn't be surprised if that happens. I wouldn't be surprised. So they started getting in long now as price was already moving up. So instead of holding their long positions from here and adding them here and then taking profits up here, they're doing the opposite. They were in short as price was rallying up.
Mm-hmm.
Then they thought, okay, since it's up here, let's start going long. So that leads me to suspect that they're probably going to drop it here so that they can get out of their longs and get in shorts, and then they'll reverse it and push it up again. You know? So we are seeing signs that they're accumulating long positions, but they're also accumulating shorts. Why are they accumulating shorts? Maybe in preparation for that drop like this. So we'll see. If that happens, then our conclusions will be correct about why they're adding their positions short here. If it doesn't happen, then we have to re-examine why they added those shorts and come to an understanding. Market summary, these are the key things that we're watching for. The important things about gold, about the dollar responding from supply. These are the key things that we're watching for. The Aussie hitting demand, holding it, potentially breaking up to the upside. Let's take a quick look. Well, look at that. Are we surprised by this momentum, guys
No.
and gals?
Nope.
You see? Isn't it just amazing?
Yeah.
Isn't it just amazing? Again, this just confirms what we know of why price is doing what it's doing. It just confirms it. I had another demand zone here because it removed this supply. I forgot to put it in, which created this area of supply here, and now it's coming into that. So if it goes up, it can create demand. If it goes higher, we have a trend line, a weekly uptrend with a weekly demand. That's powerful. That could be used to facilitate the removal of this 3-month area of supply, which we know has already been tested, and then we can get the explosive move up like this. So explosive move in Aussie, very likely.
Mhm.
What did I say last week? If you want to go in long, you'd have to base your trades off of this demand zone holding.
Yeah.
Yep.
Yeah, I know we
Anybody
were back
getting
and
long?
forth. I know we
Yep.
were back and forth with that.
Sorry?
On the weekly, I know we were back and forth with that supply there. As I see you, you're back in. With the break of each
Let me give
line.
you drawing capability. Yeah, that trend line's it's speculative.
Yeah. So this supply here, I was inquiring about this one here.
I only have that as supply because it removed this demand, which removed the monthly area of supply.
All right. Okay. Okay.
Not for the break of the trend line.
Yeah. Yeah. All right. All right.
And that's perfect because if it goes up, it creates
Uh-huh.
demand here. So you see this 50% candle here?
Yes. Yes.
That could be the demand being
Demand.
formed, okay? So if we go to the Aussie, it'd be too early to tell, but if we go to the Aussie, it was this tall candle here that represented this data, and they were not adding longs. But in the next CFTC data, we could see that this candle was an accumulation of long positions based on what I'm seeing here. Because what I'm seeing here is I'm seeing the potential for that to happen. And then you'll have a trend line, and then you'll have an uptrend like
Yeah.
that.
On the
And then we
weekly,
could
on
see
the-
this and that.
Mhm.
So upward targets, let's look at the monthly. Upward targets would be right here. Target.
Yeah.
Uh,
That supply removal 6 month one.
that's my upside target, 86.13.
Mm-hmm.
That looks good. Stop loss is below weekly demand. That. Okay.
Yeah.
Let's add this target to the other charts. Okay. Sync to all charts. There you go. That's good. Stop loss here. And if it drops back, enter another position. I think that's a good trade. I think that's getting in before the momentum is there, because it's just starting to build a momentum. So most people wouldn't even know that. Let's see, Aussie, look at that. Most of them are short.
Mm-hmm. Jeez.
Okay. So this,
Yeah.
so does this really help sell the idea that this is going to go up? Yes.
Yeah.
Look how short they are. That means the banks are really taking the opposite side of those trades and preparing for a move. I think it looks good.
Mm-hmm.
Very good.
Nice. It's
Uh,
beautiful. It really
Even
is.
when
Yes.
even when that daily
Beautiful.
supply is removed, Kev, that daily supply,
Yeah.
that'll be a great daily demand to go long off. The one high up.
So
We have one high up. There's one high up here, Kev. Yeah.
up here.
Yep.
Okay, so let's see that. It's supply because of what?
It remove a demand zone because
On the
it
daily?
remove, yes, this here.
And why? Why is that the demand on the daily? Is there
There's a supply here. This was due to, I think, a break of a trend line. Yes. There's a trend line further back.
you nailed it?
Yeah. So I was switch zone there.
Okay, yeah, you're right. Am I getting this right?
Yeah. Correct.
Yeah, exactly. Yeah, because okay, once this is taken out, it'll create demand here, but
Yeah.
there's no real strong momentum. Based on the charts, we know that
Mhm.
momentum is likely to come in because of our analysis,
Yeah.
but once this is here, it'll create an uptrend, and that will be ready for going further.
Correct.
You know, it's
Yeah.
another thing that I will show you guys is that, okay, so we have this situation, right? So again, we take what we know to be true, right? What we know
Mhm.
to be true is that what typically happens in a situation where you have price here, it comes here, okay, and it starts to do that. And we have a trend line, right? So you see the distance between here and here.
Mhm.
So when it contacts here, you can assume that it's going to make the same distance, right?
Yeah.
So that means the height of how high it moves up will be somewhat similar. It could be a little bit more, could be a little bit less, but we know that to be true. All right, so let's look at this situation here. If this is the trend line and price comes up here,
Mhm. Yeah. I see what you're
creates
saying.
demand,
Yeah.
you see how much this has gone until it contacts,
Mhm.
how far it moved, and how high it moved.
Yep.
So you can safely assume something like
Correct.
that.
Yeah. Definitely.
Doesn't that take you to the monthly target?
Yep.
Yeah. So I think that's pretty good. I think that's pretty
Mhm.
good. You could even you want to be a little bit more risky, you could put a stop loss below there and get in and target up here.
Yeah.
That's riskier because if that breaks through that demand there, which it could, not likely, but could, what would happen is it would just come down back to here and then test it and go again. It could do it.
Mhm.
The safest is to put the stop loss below that weekly demand because
Weekly.
obviously that demand is holding strong. So that could be a nice trade. That could be nice.
Yeah.
So yeah, these were the key things with the Aussie, that zone holding. Aussie US dollar contacted the weekly demand, and just as we had spoken about, we got the move upwards. We have been saying that there is a very good chance we see price build momentum to the upside and move much higher. There's a lack of proper upside momentum on the weekly chart, but other factors are building strong evidence for move higher. And so now we are seeing that starting to
Mhm.
build now, which is good. Euro, a lot of momentum is building on this chart as the descending trend line is now broken and the H4 trend is now upwards. Taking shorter term long trades could work out very nicely here with targets in the 122s. All right, so look at that momentum off that 4-hour demand zone, 4-hour uptrend. So we're making the assumption the 4-hour momentum that's being built is to help facilitate the removal of the daily supply and get us to eventually get up into this area here.
Weekly target there.
So 122s, yeah, that's the shorter term
Oh,
target
short
up there. Yeah, because these two have already been taken out or tested. This one's tested and this one's been removed. So there's nothing to stop price from going here.
Yeah.
Then that's the supply zone, the reversal zone at the top here. So we could get a more pronounced pullback from that area.
Yes. Definitely.
So that's why I would want to be safe and take profits there. What you could also do is whatever demand zones created here by removing this supply, move your stop losses from down here to above
Yeah.
here.
Definitely.
Now that builds up, it builds up your upside potential. Okay, so like if you're to get in long now, look at the small amount of risk you'd be taking. Okay, stop loss here, buy there. Okay, to aim for here. So you can get into 3 positions. One of those positions you close at 2 to 1. So when it gets up here, okay, and that basically locks you in with profits and removes the risk completely. So the chances of price moving up here are extremely high. So this is a high probability trade in my mind.
Yeah.
High probability. Because you break it down into 3 portions, all thirds, equal thirds. So if it's a $100,000 position, you break them down to 33,000, 33,000, 33,000. So your first 33K, you close here. And the 66K, you'd want to close a portion at least here. And if you wanted to move your stop loss below whatever demand zone is here, then you'd move your stop loss below here. Because what you're making the assumption of is you would buy here at the daily demand if it got back there. If it didn't and continued higher, even greater, because now you'll be aiming for a lot higher targets. Weekly target at 126, and you're getting in at 120. With a stop loss you're getting in at 120.75 with a stop loss of 120.41. Okay, look how tiny risk you're taking, and you're managing your stop losses. You're not just putting your stop losses, below, recent lows. Everything is following a specific sequence of events, right? We're making certain assumptions that the 4-hour trend is going to help facilitate a move higher. So that's a big assumption that we're making, but it's very grounded in reality. Goes higher, we're expecting 2 supply zones on the daily to get removed. The top is where we'd have some partial profits being taken because it's the very top of price action, and there's likely going to be some kind of a move to the downside. So I would take some more profits there. New daily demand, move my stop losses below there. If it drops to daily demand, enter in with another position. If there's a momentum shift off that daily demand, enter in with a new position. And now you're riding price up to the 126s.
Kev, are you joined?
So, sorry?
Are you joined?
No, I'm just speaking.
Oh.
No, I'm just speaking. I'm just speaking.
Okay.
Yeah.
Okay.
I'm not drawing anything at all.
Oh, okay.
No, nothing at all. Okay. Nothing. Not drawing anything. I'm not thinking about ice cream. Nothing. Okay. Okay. So yeah. So you see, building up a position with very little risk and huge potential upside. Huge potential upside. So let's take a look at the 15-minute chart now. Remember what we were looking at the beginning? Look at that demand. Look at it. Okay. It could do this. And then if you timed this right, I mean, if this happens, and I think there's a very, very good chance of that happening, imagine getting in long trades off of a 15-minute demand zone, okay?
Yeah.
So your risk being what? 10 pips, 5 pips, 6 pips, 7 pips?
Yeah.
And you're getting in at the 120s, and eventually some of those positions are being closed at the 126.
Jeez.
What is that in terms of risk to reward?
Plenty.
Add it up, but it's pretty good.
Oh, amazing. Where's that 126? Oh, how come it's not? Oh, that's a 15-minute chart. That's why. 126 is up here.
Yeah.
So you're
Beyond
getting
the
in
horizon.
a little zone here.
You could try it. You could
Okay.
test it with the
You could, if you had the balls. Sorry, excuse my my French, but if you had the courage and emotional capability of really believing in your analysis, because what you're believing is you're believing that this 15-minute momentum shift is going to help facilitate the move off of a 4-hour demand, which its trend is helping to facilitate a move higher on the daily chart to eventually hit, the top of the range at the 122s, reverse back, but not reverse all the way back to where you entered, but a slight pullback for the eventual continuation of the move to the 126s. This is a 30, 40 to 1 trade, more than
yeah,
that.
46.
50 to 1 trade. So
46
imagine risking $1,000
Hmm.
and just holding on to that. This is 50 G's.
Yeah.
That's 50 G's right there. 50 to 1 trade. Does anybody talk about 50 to 1 trades? No. What you see is people saying, I have $1,000 account and I was able to make 2 G's on it. Yeah, but what they don't tell you is how much they risked to get that 2 G's.
Mm-hmm. Correct.
They didn't tell you the 15 times that they closed their account. Those trades.
Yeah.
Yes. Yes.
Because
No, it's true. It's very true. Yeah.
So this is how you would build your trading account to big size from small risk. This is a perfect example of how you do that. I think it looks good. This can be a super duper trade. So I will elaborate on this in the watch list because I think it's good, and as well as the Aussie, I'll add this one as a trade because I think they're both good. And Kiwi should be doing the same thing. Let's go take a look at the Kiwi. Yeah,
Kiwi
see?
strong. Yeah.
What did I say about the Kiwi last week? Buying, putting stop losses below weekly demand, same thing, right?
Yeah.
And daily trend target is at 75. Let's see on the monthly chart. Expecting that. Okay, then the problem is you got a 3-month supply. So you'd have to take target profits at the daily trend target at 75. Yeah, that's what I would do. So let's see if it closes above here. Demand. Trend line, demand. You could start buying. Stop losses below 4-hour trend because you are going with the same concept of what's happening on the euro, is that this 4-hour trend would help to facilitate the removal of this daily supply. You could also get a pullback to that daily supply because that's a very key supply that was used to push price down. So you could also get that as well. That could work out. Although I don't like this trade as much as the Aussie long. I don't like it as much. The Aussie has more upside potential. It's a little bit more clear from what I see.
Mm-hmm.
And US CAD. Woo-wee!
Yeah.
Woo-wee! Can I get a hell yeah up in here? Can I get a Hail Mary full of grace up in here? Hallelujah! Hallelujah! You see, I just love it. I just love when I get into trades and then scary things happen. It's like, ooh, it's going against you. It's going against you. I've come to learn to embrace that feeling because it's so liberating. When
Yeah,
before
yeah.
certain moves in the market used to freak me out, now I'm like, bring it on. You don't scare me. I know what you're doing. I've done my analysis. I've conquered you. Why do you think I spent 35,000 hours studying you? Is so that you didn't scare me, so that I knew all your little moves and all your little tricks, and now I can
Mm.
open up positions and you don't scare me. And then when you see it play out, when it gets up into these areas, it's like, yeah, okay, weekly supply is still holding. I'm not worried. Everything is in line with this move continuing.
Yeah.
And then you go on to the to look at what the retail's doing, and it just confirms that I've got nothing to worry about. If the retail were in short with me, I'd be worried.
Oh.
I'd be like, I didn't see something. I didn't see something
Yeah,
right.
yeah,
But
yeah.
but when I see that, I'm like, yep, I'm doing the right thing. So making money,
Mm-hmm.
making money. So trading is not easy, but you can make it simpler when you put in the effort. Bottom line, if you don't put in the
Yeah.
effort and you're relying on indicators and all that garbage, forget about it. What kind of respect are you going to get from the markets? The markets are not going to treat you with any respect. You're using indicators to try to figure it out. It's not going to work,
Mm-hmm.
right? It's only the
Yeah.
hard work that we put in that makes us able to understand what's going on. So gold, not much in terms of their oil, not much in terms of their. Um, they're adding with the dollar. They're adding short and taking off longs, which is what we wanted to see. Aussie, they haven't shown their cards yet. I think next week's data and the following week's data will show. And look at this one. This is a beautiful thing. I mean, look, they're already adding here 48 to 53. But we knew that before it happened, right? What do you think retail traders were looking at when they saw this? What do you think they were thinking when they were looking at the US CAD and they're looking at positions and they saw this increase from 41 to 45s? They're like, oh, they're starting to build a long
Oh,
position.
uh-huh.
But we don't get tricked by these short-term moves. We don't get tricked because we know the context of what price is doing. We know that they were adding longs in preparation for pushing price up to lure traders into getting long. And then when this happens, when I see data like this, after I've been holding my ground, holding my ground, holding my ground, it's like, you're in a battlefield and you got the opposition running towards you, and you're being told to hold your ground because you're being told that they're not going to run into you and slam into you. They're going to stop before that happens, but you got to hold your ground. And then when this data comes out, it's like that army stopping like 2 feet away from you, and you don't get trampled. And you're like, yeah, I knew it. I knew it. And now we're starting to see net positions go into the negative. So this is good confirmation, and it's all across the board. It's not just like one or two that are showing these signs. It's all across the board. So it really supports us. Not much with U.S. Swiss. Euro to the upside, big increase in longs, 190 to 197. Amazing. Okay, amazing. And then reducing shorts, 123 to 116. That's exactly what we wanted to see. Beautiful. Okay, pound. Look at that big increase in longs from 52 to 61. Wonderful. It's great, right? What did we say? Weekly trend was going to hold. Why did we say that? Let's go take a quick look at pound. So it's sitting and relaxing. What do you think? What do you think is going to be the next big mover?
Yeah.
Likely,
Yeah. Pound.
likely that. Okay. It's not doing it now, but it's likely going to come. Why? Well, because look at what everything is showing us. So when it happens, you can pat yourself on the back and say, see, I knew it. I called it because of what was happening. And so there was no demand here. So what was going to hold price up? Probably the trend line because there's no demand. So We got the reaction. Now we're seeing them build their longs, and they're also increasing their shorts. So we can go into more detail to find out what the heck is going on there, but not important. US dollar, Japanese yen, increase longs a little bit, and reduce shorts. So this one's always a little bit contrary. And I think it has to do with this currency being used as a hedge against other things. So they tend to be a little bit off. The data and what's happening on the charts tend to be a little bit off. But that's okay, because we just follow the supply and demand, and we can see what they're doing. And Kiwi, big increase in longs, 19 to 21, doing nothing with shorts, and that was coming here. And now we see the bullishness, right?
Mm-hmm.
So, see, with the COT reports, one of the things that people get wrong when they are studying the COT reports is they take it too literally. They see it, they're like, oh, they're adding longs, so they must be going longs. Oh, they're adding shorts, so they must be going short. No, it's all, you have to put it within context. Why would they add longs in that scenario? Are they tricking traders? Are they luring traders? You know, then you figure it out. But you can't just take it literally, because then you'll get it wrong. Pro watch list, yeah. So I added the short-term trade euro US dollar to the upside. Excuse me. I also put different probabilities based on putting your stop losses in certain areas, because I wanted to lay that out, that you could trade this multiple ways, right? You've got the ability to put a stop loss here, which makes the risk lower, or you could put the stop loss here, which makes the risk higher. Why? Because if you put it here, you're making the assumption the 4-hour trend is going to hold. This could break, and it could come down to here. Why? Because of lack of trend on the daily chart. Lack of trend on the daily chart means price could react in, you know, in unpredictable ways. So, but when we're examining things, it makes a lot of sense that they would use the 4-hour trend to facilitate this move, to bring it up here, break it through, and go here, which is why, you know, I wouldn't mind taking that trade with that stop loss there. Looks like it broke that 15-minute that we were looking at while we were chatting. See, big. You see the big push?
Yeah. Mm-hmm.
The big push is to get through supply. So now we have, this is a tricky area to locate demand, but it could be like that.
Yeah.
And then it could sit here, and then it could drop. So that looks good. Okay. Any questions about any of that stuff that we went through? Let's see, Francesco, CAD Yen, Kevin is shifting momentum as well. Let me see CAD Yen. Yeah, so it would be going up because of the CAD weakness, shifting momentum. Now, it looks like it's going to start heading towards the weekly target of 191.028. We still have that one on the thing, don't we? Let me check. CAD Yen? Yeah, CAD Yen 87.34. Oh, that was where price was at. Let's see. We have a second weekly target, 91.02. Yeah, it's there, 91.02.
Yeah.
Yeah. Yeah, based on weekly trend. Let me see. This is expected to hit as long as weekly trend holds. Yeah. Yeah, so it's looking good. Really good.
Perfect, yeah.
Winner, winner, chicken dinner.
Yeah.
So, yeah, don't you love trading when it just works out so nicely like this? You know?
Yep.
When the odds aren't great, but you think, you know, you can speculate, maybe it's going to make this move, you get in with a small position. Okay, so you're wrong. You took a small loss, no big deal. But when things start to play out and you start to see things a little bit more clearer and everything is starting to realign, then you get in with bigger positions. Now's the time to get in with bigger positions. Now's the time. You know, the Aussie longs, Euro longs, Kiwi longs, not so big position because it's not the clearest chart. US CAD shorts, next on the agenda will probably be gold long. Okay, we just got to wait for it to produce something more substantial here. If it came down to this area, to the daily here, oh boy, if it gave us a nice momentum shift to the upside, that could be an early long signal for, getting in with small risk. Again, you're making the assumption that it's going to break out, but I think it would be a safe assumption. Aussie and gold are usually aligned, right? What do we see with the Aussie? About to shoot like a
Yeah.
rocket. So
Yeah.
I think it's pretty decent odds that that takes place. Pretty decent odds. So yeah, let's see. Especially when you start to understand why certain things happen. Yeah, exactly. When you start to understand why certain things happen, that's exactly what it is. Because you can't have the answers to everything, and you're not going to be handed the answers to every situation. But if you build up your understanding of things and build up the logic of things, again, building up your knowledge base, and then you can be analytical when you look at the information because you have something to base it off of. And you add all that together, and then it starts to go. It's just so great. That's why I love trading, because it's like it gives you the rewards of your effort. And depending on how much you value yourself, the rewards can be even greater. Right? You have people who have tremendous talent, like a singer, somebody that has a tremendous voice, has incredible talent, but they don't think that they're a big star. So what do? They only perform at the local pubs. They only perform at the local hotspots, and they never make anything of themselves because their self-esteem is low, their self-worth is not large, so that's all they ever do. But somebody comes in and meets with them and says, man, you got massive talent, I could really make you a big star. Start promoting them, start getting them into bigger venues, and that same person with the same talent, now because they have, their self-worth is larger, now they are more successful. It's the same thing with trading. Once you build up the skills, first you have to have the skills. Once you have the skills, then it's all about what is your self-worth, right? How much do you believe in yourself? How much do you believe in your analysis? Do you only believe in it enough to open up a trade at 0.25% risk? Or do you believe in it enough that you can open up 1% risk? Eventually you get to the point where you're like opening up multiple positions, 1, 2, 3% risks, manage your stop losses, keep your risk low, but upside potential massive, and build and build and build and build and hold strong and don't give up and keep examining the markets, being smart. You don't want to just be blindly holding strong. You be smart. You manage your positions, manage your stop losses, keep analyzing the markets, keep making sure that what you expect to see, you see, like the COT data, like I was saying. I want to see the Aussie, not so much next week, but the following week. I got to see that they're building in longs. If I see that, that just builds up my strength and builds up my confidence in adding more long positions as price makes its way up, because it's what I would expect to see. Okay, and look at what Aussie's doing. So if it's what you expect to see because you're following along with the story, oh boy, I mean that's golden. You can't get anything stronger than that. And you just incrementally add, keep adding your long positions and hold strong, and eventually when those targets get hit and you look at the profits that you made in your account, boy oh boy, there's nothing better, no better feeling than that. No better feeling, and nobody can take that away from you. That's the great thing. Doesn't matter about the economy, doesn't matter about what's happening in the world, doesn't matter if there's jobs, no jobs, economy is booming or bust. No matter what, as long as you have this skill and you remain calm and you build up your confidence, you will do well. Very well. I got to start getting into positions, guys, because this is going to take off without me, and I'm really, really liking this this setup here. So I'm going to be opening up some positions, getting in early. Let's just draw that. So I'm going to be opening up positions on the Aussie, long. I already have long positions on the Euro that I opened from lower. I'm going to start entering in more long positions on the euro. I'm going to be adding to my US CAD shorts. Yeah, I'm going to wait for US CAD to pause and then pull up. We're in a 4-hour demand zone, so this is good. So we might get some kind of a pull up here, and then I'm going to start adding to my shorts. Accumulate my shorts. And daily downtrend 123. I mean, weekly trend target is 114. I mean, that's a big move. Weekly trend target's 114. You know, we've got this already here that's tested. So we can expect that to break. This is already lightly tested, so might rally up to whatever supply removed this area. And then it continues down. This can rally up to a daily supply, drop down, and then I have my weekly target down there because, why did I have the weekly trend target there? Before the monthly area of demand gets hit. Yeah, yeah. So it's good. So now's the time to make money in 2020. Okay, now's the time.
21,
Okay.
Kev.
Sorry, look at that. I'm still in the past. Okay. It's 1982, guys. So get with it. Okay.
Yeah.
You know, there's been many times where I say, now's not the time, now's not the time, now's not the time, now's not. Now I'm saying is the time.
And now
you see why. Now you see why. So remember this, ingrain this in your brains. Everything we've talked about in this session, why it is the time. We went through the data, we went through the storylines, we're seeing the moves, we're anticipating what's about to happen. This is like major anticipation of what's about to happen. Getting in short on US CAD all throughout here and holding throughout here, that was a major move. Okay, that was major anticipation, and now we're seeing it play out. So, you know, the euro, we're really anticipating this euro 4-hour trend is going to be used. So there's a lot of speculation here, but it's not blind speculation. It's really it's really grounded in something strong here. Yes, we can get a move down here, but what's the likelihood of that? It's not that high. Okay, based on what we're seeing with the other currency pairs, I don't think that's going to happen. Could it happen? Yes. And you know what? If you get out of this trade for loss, who cares? Because guess what? When it comes down here, 4-hour momentum shifts off that weekly, and boom. Okay, we get in from lower. No problem. We make that money back in 2 seconds. No worries. But it's very good chances for it to continue up like that. So I'm going to start getting involved. Let's see what it looks like now on the 15-minute chart. One more look at this, and then I'll let you guys go. Yeah, see? Look at that. Look.
Oh, yeah.
See? Rallied up, consolidated. What did I say? I said it before it even happened. Where's my crystal ball? Where's my crystal ball? You know, it's funny. My buddy who trades Bitcoin, right? Remember I told you the conversation. He's like, I don't know, man. I don't think it's going to drop down like that. I wouldn't. And I'm like, well, okay, but you know, it did take out those areas of demand. Yeah, but I'm not looking at that. I'm like, I know. And then it went down to the 48s. He's like, it dropped from 56 to 48. I'm like, yeah. He goes, should I be buying now? Like, how far down is this going to drop? I said, I told you. I said, listen, I don't have a crystal ball. I can't tell you how far down it's going to drop. All I can tell you is what's likely going to happen based on the formations on the chart. I wouldn't be buying now. I don't think it's a good idea to be buying now. That's what I know. I'd have to wait for it to go lower. So otherwise, I'd want it to create some new foundation for me to base a trade off of. Otherwise, I can't get involved. So, but you know, your typical investor doesn't think that way in terms of building foundations and all that stuff. They just want to call the bottom, and is it the bottom now? How can you tell? You can't tell. I can tell if it hit a massive demand zone, but not when it's breaking structure on the daily chart and there's nothing to support it. So yeah, guys. So that's it.
Great.
That's it.
Nice. Appreciate it, Kev.
Awesome. Yeah. Thank you, Kevin.
No problem. Thank you. So you guys, I'd like to set up some time today. Not today. Sometime this week. I have some emails that I have to catch up on. It's been crazy on my end, just the amount of work I've been doing
Mhm.
and interacting with people. But I got so many emails to catch up with. I got the session that we did on Friday that I have to edit and upload. And then I got to do this one. So there's just a bunch of things. But when I find some free time this week, I'd like to get together with you guys and look at your work because you guys are incredible what you guys are doing. I've always wanted to spend some more time with my spreadsheets and calculate, but I can't do everything. And it's just, and for you guys to come in and say, I've got this, you guys don't know how much that means to me. It means so much to me that you guys came in and said, hey, we got this. And then I
Yeah.
see your work and I see how much work you put into it. And I'm just like, I just want to give you guys a hug. I'm like, I just want to hug you guys and say, shit, wow, this is amazing. Like, this is just great. Like, you're doing stuff that I don't think I could have even come up with, Or if I was to come up with it, God knows how many hours it would have taken me to even come up with it. But you guys are so creative, and your thought processes, you really nailed it with what you guys created. So I'm really looking forward to getting together with you guys to discuss that.
Great.
Thanks, Kev.
All right. So
Okay.
I'll be in contact with you soon.
Yeah.
All right,
Yeah.
guys,
No rush.
I'll let you go. Yeah, thank you. And
Sure.
we'll talk to you guys. Okay.
All right.
Sounds
Bye,
good.
Bye.
everybody.
Yeah, take care.
Bye-bye.
See you. Bye. Hey everyone, it's Magic Trader here. If you're interested in joining us and learning more about supply and demand trading the way that we do it, you got to come over here to www.whiteoakfx.com and just click on the Start Learning button now and you will get yourself started. All right? See you in the class.